Hello and welcome to my channel. Before starting, support the channel by liking this video and subscribing to this channel for future updates. Today we going to talk about protecting your finances, strategies for dealing with a declining dollar. After strong and steady gains through the late 2010s, the value of the dollar relative to other world currencies has been gradually weakening since 2020. The depreciation accelerated into 2022 as inflation has picked up, impacting both domestic and international investments. When the dollar is strong, it reflects a robust U.S. economy, low Federal Reserve interest rate increases, and tax policies that encourage companies to bring back profits from abroad. On the other hand, a weak dollar can signal an economic downturn, rising inflation, or both. The impact of the rise or fall of the U.S. dollar on investments is multifaceted. Most notably, investors need to understand the effect that exchange rates can have on financial statements, how this relates to where goods are sold and produced, and the impact of raw material inflation. The confluence of these factors can help investors determine where and how to allocate investment funds. Read on to learn how to invest when the U.S. dollar is weak. Domestic impact. In the U.S., the Financial Accounting Standards Board, FASB, is the governing body that mandates how companies account for business operations on financial statements. The FASB has determined that the primary currency in which each entity conducts its business is referred to as functional currency. However, the functional currency may differ from the reporting currency. In these cases, translation adjustments may result in gains or losses, which are generally included when calculating net income for that period. What are the implications of these adjustments when investing in the United States in a falling dollar environment? If you invest in a company that does the majority of its business in the United States and is domiciled in the United States, the functional and reporting currency will be the US dollar. If the company has a subsidiary in Europe, its functional currency will be the euro. So, when the company translates the subsidiary's results to the reporting currency, the US dollar, the dollar-euro exchange rate must be used. For example, in a falling dollar environment, 1 euro buys $1.54 compared to a prior rate of $1.35. Therefore, as you translate the subsidiary's results into the falling US dollar environment, the company benefits from this translation gain with higher net income. Why geography matters. Understanding the accounting treatment for foreign subsidiaries is the first step to determining how to take advantage of currency movements. The next step is capturing the arbitrage between where goods are sold and where goods are made. As the United States has moved toward becoming a service economy and away from a manufacturing economy, low-cost provider countries have captured those manufacturing dollars. U.S. companies took this to heart and began outsourcing much of their manufacturing and even some service jobs to low-cost provider countries to exploit cheaper costs and improve margins. During times of U.S. dollar strength, low-cost provider countries produce goods cheaply. Companies sell these goods at higher prices to consumers abroad to make a sufficient margin. But when the dollar is weak, it helps exporters. As the U.S. dollar falls, expenditures are paid in U.S. dollars. But revenues are received in stronger currencies. In other words, becoming an exporter is more beneficial to a U.S. company. Between 2005 and 2008, for example, U.S. companies took advantage of the depreciating U.S. dollar. And U.S. exports showed strong growth, shrinking the U.S. current account deficit to just 2.744% of gross domestic product, GDP, in 2009. However, many of the low-cost provider countries produce goods that are unaffected by U.S. dollar movements, because these countries peg their currencies to the dollar. In other words, they let their currencies fluctuate in tandem with the fluctuations of the U.S. dollar, preserving the relationship between the two. Regardless of whether goods are produced in the United States or by a country that links its currency to the United States, in a falling U.S. dollar environment, costs decline. A good historical example of such a divergence from this cycle occurred during 2007 and 2008 as the direct relationship between economic weakness and weak commodity prices reversed. During the first 5 months of 2008, the price of crude oil was up over 20%, the commodity index was up around 10%. The metals index was up almost 15%, the dollar depreciated around 4%, and global food prices increased sharply. According to Wall Street research by Jens Nordvig and Jeffrey Curry of Goldman Sachs, the correlation between the euro-dollar exchange rate, which was 1% from 1999 to 2004, rose to a striking 52% during the first half of 2008. While economists still disagree about the exact reasons for this divergence, there is little doubt that taking advantage of the relationship provided investment opportunities. Profiting from the falling dollar. Taking advantage of currency moves in the short term can be as simple as investing in the currency you believe will show the greatest strength against the US dollar during your investment timeframe. You can invest directly in the currency baskets, or exchange-traded funds, ETFs. For a longer-term strategy, investing in the stock market indexes of countries you believe will have appreciating currencies, or investing in sovereign wealth funds, which are vehicles through which governments trade currencies, can provide exposure to strengthening currencies. You can also profit from a falling dollar by investing in foreign companies or U.S. companies that derive the majority of their revenues from outside the United States. As a non-U.S. investor, buying assets in the United States, particularly tangible assets, such as real estate, is extremely inexpensive during periods of falling dollar values, because foreign currencies can buy more assets than the comparable U.S. dollar can buy in the United States. Foreigners have a purchasing power advantage. Finally, investors can profit from a falling U.S. dollar through the purchase of commodities, or companies that support or participate in commodity exploration, production, or transportation. U.S. companies generating international sales. A weaker dollar can be good news for U.S. companies with international businesses. This is because a weaker dollar means goods and services being purchased with U.S. dollars become more expensive. For the consumer, says Stephen Colano, CFA and Managing Director of Investments at Integrated Partners, when a company has a lot of sales outside of the U.S., they have to translate those sales and earnings back into the reporting currency, which in this case is the U.S. dollar, he says. When the U.S. dollar is strong, companies generating international sales effectively earn fewer dollars and generate lower earnings than expected. The opposite is true if the dollar is weak, and earnings translated to dollars can be more dollars and help to increase earnings in relation to estimates, Colano says. The bottom line: predicting the length of U.S. dollar depreciation is difficult because many factors collaborate to influence the value of the currency. Despite this, having insight into the influence that changes in currency values have on investments provides opportunities to benefit both in the short and long term. Investing in U.S. exporters, tangible assets, foreigners who buy U.S. real estate or commodities, and appreciating currencies or stock markets provide the basis for profiting from the falling U.S. dollar. Trade on the go. Anywhere, anytime. One of the world's largest crypto asset exchanges is ready for you. Enjoy competitive fees and dedicated customer support while trading securely. You'll also have access to Binance tools that make it easier than ever to view your trade history, manage auto investments, view price charts, and make conversions with zero fees. Make an account for free and join millions of traders and investors on the global crypto market. Thanks for watching.